Gold just reversed from its jobs report bounce and is now sitting on the number that will either ignite a breakout or trigger a free fall. 41.58. That's the floor. Right now, lower time frame trend screams strong buy, but the daily chart is neutral, and the dollar is recovering. The trap? If price sweeps 4,158 and snaps back, it's a textbook liquidity grab and a long scalping opportunity. There are two types of traders right now, the ones staring at a bounce that feels like the start of something big, and the ones who see the most dangerous liquidity trap in gold this month. You're looking at 4,161 on XAUUSD, down $14 on the session, and I guarantee the majority is long, comfortable, and completely blind to the 4,158 floor that is about to define who keeps their capital and who gets run over. In the next 12 minutes, I'm going to show you one danger zone and one hidden opportunity. I'll give you two scalp plays and a swing trade you can execute today with exact numbers. And on screen right now you see 41.58 trap, 2 scalps plus 1 swing. Don't just watch this, study it, because when this level goes, volatility doesn't knock, it kicks the door down. Let's cut straight to the instant market verdict. My session bias is a fade inside a range, with a bearish tilt until 41.98 is reclaimed. The bounce from last week's weak jobs data is losing steam, and the dollar is recovering from its weekly low. That's the headline, but the real story is that gold is failing at the 20-period moving average on the daily chart, 4,169. And the trend on the higher timeframes is not your friend. Weekly shows strong buy, yes, but that's lagging information. The daily is neutral, and the 4-hour and 1-hour are screaming strong buy. That divergence is the trap. The single invalidation level that flips my bias outright is 4,158. Write this number down. If we break and hold below 41.58 today, the entire bounce structure from the jobs print resets, and we are headed straight into the 41.43 support with a very real shot at 4,100. The herd is positioned long from the bounce. They've got stop sitting right under 41.58. That's the liquidity the market needs to fuel the next leg down. So, if you're long, you need to know exactly where the exit door is. And if you're looking to short, you're about to see the setup of the week. Now, let's go into the technical deep dive, and I want you to visualize the chart from the top down. On the weekly, gold is still technically in a strong buy structure, but the price is trading far below the 50-week moving average, which sits at 43.40, and the 100-week at 44.37. The 200-week is 43.34. All three of those long-term averages are hundreds of dollars above current price. That tells you the secular trend has been damaged. The bounce from the sharp sell-off was powerful, but it hasn't recaptured any of those key moving averages. The weekly ADX is 35.8. That's a trending reading, but the trend is still bearish until we prove otherwise. The daily chart is where the battle is. Price is 41.61, sitting right below the daily MA20 at 41.69. The daily RSI is 46, neutral but tilted down. The daily MACD is deep in negative territory at -75, and although the histogram is trying to curl, there's no bullish cross. That's your first hidden divergence. Strong buy signals on the 4-hour chart against a daily that remains in a correction. Most traders see the 4-hour strong buy and jump in, but they miss the fact that the daily 20 MA is acting as a brick wall. If you look at the stochastics, they're at 65, not overbought, but starting to roll. The CCI is 68, also drifting. This is not the profile of a breakout. It's the profile of a coiled spring that needs a catalyst. Drop down to the 4-hour and 1-hour, and here's what most traders miss, and I'm putting this on screen right now. On the 4-hour, the MA5 and MA10 have crossed up, giving a strong buy signal, and the MA20 on that time frame is currently 41.41. Price is above it, so momentum traders are piling in. The 1-hour shows the same, with a strong buy and the 1-hour MA20 at 41.60. That's exactly why the 41.60 to 41.70 zone is so heavily contested. But here's the institutional secret. When the lower time frame moving averages are sloping up inside a daily range that hasn't broken resistance, the big players are building a liquidity pool. They're letting the breakout traders commit, and then they'll either push through 41.98 to trigger a genuine breakout or smash 4,158 to collect all those stops. The daily support and resistance levels are clean. S1 at 41.70, S2 at 41.58, S3 at 41.43. Resistance are 1 at 41.98, R2 at 42.13, R3 at 42.26. The pivot point is way up at 42.86, confirming that the overall structure is still bearish. Pivots act as gravity, and we are well below it. So the technical narrative is a bear flag or a correction within a downtrend that is testing the underside of broken support. The volume isn't confirming the bounce either. Participation is thin, which means this move can reverse violently. Here's the bridge. The next signal changes everything. If gold accepts above 41.98 on a 4-hour close, the picture flips, and we target 42.26. But if 4,158 fails, the monthly trend that's still showing buy will start to wobble, and we'll see a cascade of late longs getting liquidated. You need to know exactly which side the big money is on, and I'll connect that to the fundamental driver right now. The 24-hour core news is simple. Gold prices reverse course as the US dollar recovered from its weekly low. The dollar index bounced off a key support, and that's crushing gold's safe haven bid. The weak jobs-driven bounce was based on the idea that the Fed might slow tightening, but the market has already priced in a pause, and now real yields are creeping up again. The 10-year TIPS yield is inching higher, and that's the fear architect's kryptonite. Gold and real yields move inversely, and right now, real yields are subtly climbing. Add to that the geopolitical pulse, no new escalation, so the fear bid is fading. In the cross-asset linkage, Bitcoin is acting like a risk asset shadow, correlating with the S&P 500, which is showing gamma pinning. If equities stay bid, that might cap the dollar, but the correlation with gold is messy right now. The 1 to 2 week directional lean is bearish for gold unless we see a clear close above 41.98, and I'm watching the dollar break above 105 as the exact event that would accelerate the move to 41.43 and lower. Here's your second interaction trigger. Do you think gold closes above 4,198 this week? Comment yes or no right now. I'm tracking consensus and I'll reveal the crowd's bias in tomorrow's video. This is how we gauge whether the retail herd is about to get squeezed. Now we enter the trade setup section, and most people skip this. That's exactly where the money is made. Keep watching, because I'm going to give you exact price triggers, stops, and take profit levels. And after each one I'll put a clean trade card on screen so you can screenshot it and execute. The first strategy is the opening scalp, and this is a high probability long right at the 4,158 support. The idea here is to catch the bounce from the liquidity pool that forms when the herd stops get tapped. On a 5-minute chart, you wait for price to tap into the 41.58 to 41.55 zone and immediately print a bullish engulfing candle or a sharp rejection wick with the 5-minute RSI hooking from oversold. The exact trigger. Price touches 41.58, then a 5-minute candle closes with a body above 41.60. Entry is 41.62 on the close of that candle with a stop loss at 4,154. That's below the wick and below S3, giving you an $8 risk. Take profit 1 is at 4,170, which is the intraday resistance and MA20 confluence. That's a 1-to-1 risk reward. If momentum extends, take profit 2 is at 41.80, capturing the next leg. What instantly voids this scalp? If the 5-minute candle that taps 4,158 closes below it without a reversal structure, that means the floor gave way, and you do not catch a falling knife. On screen now, the opening scalp, entry, 41.62 on 5M bullish engulfing after 41.58 tap, stop loss, 41.54, take profit 1, 4,170, risk, reward 1 minute and 1 second, invalidation. Void if 5M candle closes below 41.58 now. The second scalp is the liquidity grab, and this one is a counternoise short designed to exploit the false breakout above the range. The session high and the daily pivot zone suggest that 41.95 to 41.98 is loaded with buy stop orders from breakout traders. The big players often engineer a spike above 4,198 to trigger those stops, only to slam price back down. The setup: on the 15-minute chart, you watch for a sudden spike above 4,198 that reverses in the next two candles, forming a shooting star or a bearish engulfing that closes back below 41.95. Entry is 41.94 on the close of that reversal candle. Stop loss goes at 42.05, just above the wick and above a 1, giving an $11 risk. The target is the nearest intraday liquidity pool, which is the 4,180 level. So take profit 1 is 4,182. This is a fast snipe. You need quick execution, and you trail your stop to break even the moment price touches 41.90. Warning: this requires fast fingers and confirmation. Don't enter on the spike alone. Wait for the snapback. Invalidation: if the 15-minute candle closes above 4,200, the breakout is real and the trade is void. The liquidity grab. Entry: 41.94 on 15M bearish reversal after spike above 41.98. Stop loss: 42.05. Take profit 1, 4,182. Risk, reward 1 minute and 1.1 second. Invalidation: void if 15M close above 4,200. Before I give you the swing trade, I need to hear from you. Are you scalping or swinging this week? Comment scalp or swing right now. I want to see where this community sits. This isn't just engagement, it tells me the pain threshold of the crowd, and that's a contrarian signal in itself. The third strategy is the session swing, and this is the one that aligns with the 4-hour and daily bias for a multi-session hold. Here's the condition: we need a 4-hour candle close above 41.98, and on that same candle, the MACD on the 4-hour must print a bullish cross above its signal line while the RSI holds above 55. That would confirm that the daily bearish correction is ending and the weekly uptrend is resuming. Entry is 42.02 on the close of that 4-hour candle, with a stop loss at 4,145. That's just below the daily S3 at 41.43 and below the last higher low, giving a $57 risk. Take profit 1 is 4,226. The R2 resistance, for a $24 gain, and the stretch target is 42.60, which is the next major liquidity zone before the pivot. This gives you a risk reward of roughly 1 to 1.6 on TP1. The trailing stop rule: once price hits 42.13, move the stop to break even plus 1 ATR, which is about $95, but we'll use a tight trail at 4,195 to lock in profit. The explicit invalidation level that shifts the medium-term outlook is a daily close below 41.43. If that happens, the swing idea is dead and the downtrend accelerates. The session swing. Entry: 42.02 on 4H close above 41.98 with bullish MACD cross. Stop loss: 41.45. Take profit 1, 42.26. Take profit 2, 4,260. Risk, reward 1:1.6R. Invalidation: void if daily close below 41.43. Never risk more than 1 to 2% of your account per trade. On these scalps, I'm looking at 0.5% risk because volatility can accelerate in seconds. No positions through high-impact US news releases. Today's dollar recovery can turn on a dime with any data surprise. Stops are non-negotiable. A 4,154 stop on the opening scalp is there to protect you from a cascade. This is how you survive to trade the next big move. Let's close this out with the retention loop. The single most critical level for the next session is 4,158. That is the floor that separates the correction from the collapse. Tomorrow, we have US consumer sentiment and a fresh read on real yields. And if the dollar breaks 105, the monthly trend on gold could flip bearish right when everyone thinks the bottom is in. I'll have the updated blueprint 24 hours from now, and if 41.58 breaks, the whole structure I just showed you resets, and the 4,100 level becomes the new battleground. If you want the full breakdown on Bitcoin and the Brent divergence, that video is live now. Tap the end screen to watch it immediately, because the risk asset shadow is sending a signal that gold traders absolutely must see. Then hit the bell so tomorrow's gold alert lands before the London fix. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the herd moves.